This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So let's go through and have a look at the financial markets and see how it fits into this part of the syllabus that's worth 15%, which is looking at your long-term sources of finance, isn't it? So what you've got in terms of the financial markets are essentially consisted of two parts. Okay, it's all about finance and how we can raise that finance essentially. So first of all, we look at the money markets, and then we'll go through and just talk briefly about is it the capital markets. Okay. So when we're looking at the money markets, we've seen a lot of that in F1 because F1 was all about your short-term finance, wasn't it? Here in F2, we'll look at the capital markets, which, as we'll see in a minute, is all about long-term finance. But short-term finance, just to go through and remind you, things that you've seen in F1 were things such as treasury bills, commercial papers, and certificates of deposit. Okay. Remember, all the less than 12 months and shorter in some circumstances. But seeing that, dealt with it in F1, well done, you've passed it. Can you remember it all? Don't worry, I'm not going to challenge you. What I will do, however, is just make sure that you know that they are money market instruments. And the reason why is because I do still think that the objective test question could try you to identify which of the following belong to the capital markets, and they'll give you a select all with several that appear from the capital markets, and then the other ones might be there to do with, say, your money markets and short term. So don't put in the short term. Okay, the capital markets is long-term finance and the provision of long-term finance. So anything long-term, medium-term, anything essentially greater than 12 months, isn't it? Okay, so things that we see there, equity. So we need to look at how a business will go through there and issue shares. But it's not just also about issuing the shares, it's also about who goes through and buys those shares, isn't it? We look at debt. So larger businesses can go through there and issue bonds and issue debentures with regards to longer term debt. But again, it's not just about issuing the debt, it's also about who goes through and buys that debt. Okay, so the investors in debt, as well as ourselves being the issuing company. You've then got, is it your derivatives? So derivatives we'll touch upon much later on within the financial instrument chapter. I'm not too worried about it for now. Just be aware that they belong to the long-term finance capital markets. Okay, excellent. So let's go through and look at the financial markets in a little bit more detail and how it actually works. So what you've got there is you've got your providers of finance, banks, and stock exchanges. They are your main financial, shall we say, intermediaries, the middle party that ensures the flow of capital around the world, essentially. Now, without these banks, without these stock exchanges, the flow of capital would be restricted, and therefore things would not happen as efficiently as they do in the markets. Okay. So what you've got there is the banks and the stock exchanges, they help provide funds, don't they? Okay. So they will go through there and provide funds to individuals. You know, I have a mortgage. I'm actually sat in my house filming this video upon which the mortgage has been taken out on. Okay. I have to pay the bank back the money that I have borrowed. They provided me with the money up front to purchase the house, didn't they? Okay. So they provided me that capital. Likewise, companies will need funds, whether they borrow money directly from the bank, whether they issue shares on the stock exchange and get cash, or whether they go through there and issue debentures that are traded on a recognized exchange, and therefore use that money from either the equity issue, the share issue, I should say the share issue or the debt issue, to go through there and invest in positive NPV projects. Okay. The other one, I suppose, is the government. Now, the government needs funds from the banks, the stock exchanges, to provide them with funds to build infrastructure, whether that's roads, railways, hospitals, and schools, isn't it? Okay. So they could go, if you like, to those financial intermediaries. Okay. However, where the banks, where the stock exchanges, where do they get the money from? They're just like a middleman, aren't they? In terms of the flow of the funds, they help bring people together, and those people together are the same: the individuals, the companies, and government. Okay, because individuals, company, and government, believe it or not, they provide their surplus funds to the financial intermediaries who then provide the funds to somebody else. You're individual. Have you got any savings? Do you put money into a bank on a regular basis? You do. Okay, excellent. If you don't, good on you as well. Interest rates are pretty low at this point in time, so you may as well spend the money whilst you can. But if you put money into a bank account and you save, then that's your surplus funds that are going to the bank. The bank has millions of customers like you, and they can then use that money to provide the funds to individuals, companies, or the government. Okay. Companies may wish to invest some of their excess funds to try and get more of a return for the shareholders. If you've got cash within a till in a supermarket, it's not doing much, is it? Okay, so maybe you want to go through there and invest those funds in the stock market very briefly, get a brief return before you liquidate the investment to then invest elsewhere. Okay, you've got a nice little return that you can give back to your shareholders. Likewise, governments, the governments have surplus funds these days. Not many do. I know the UK government doesn't have many surplus funds. They're borrowing a lot, like a lot of businesses and a lot of companies, a lot of governments around the world. But if you do have surplus funds, I think China has plenty of surplus funds, then they will provide that money to the banks and the stock exchanges. They can then provide it to individuals, companies, and governments. So the three, if you like, entities or three items of individuals, companies, and governments are the people who go through and invest, and then also are the people who need the finance. Okay, and that's done by the financial intermediaries. So if you like that, that's done by an indirect route. Okay, there's nothing to go through there and stop things being done directly. So governments lending to governments, or governments lending to companies, or governments directly lending to individuals. But sometimes that carries a little bit more risk because maybe the banks and the stock exchange are a bit more regulated. That gives you a bit more security. Okay, so just be aware of that there. Okay. If we go through and just focus specifically on the capital market, things you need to know about the capital markets is that there are two types of capital markets. So we're focusing now predominantly on the long term, aren't we? I think greater than 12 months. You've got your primary markets. That's whereby a company can raise new finance. So that's where you would issue your shares, issue your debt for the first time to find new investors. Okay. The other one is your secondary markets, and a lot of the secondary markets are also the primary markets as well. But a secondary market gives the people who have invested their funds, whether that's in equity or whether that is in debt, it gives them the opportunity to go through there and trade and sell their investments. So that's normally on a regulated exchange, or it could just be done over the contract. So if you like, or over the counter, sorry. So directly between two parties. Okay. So when you're thinking about the London Stock Exchange, it has the primary market being the FTSE, the Financial Times Stock Exchange, for all your large listed entities. That will go through there and allow new large listed entities, if they wish, to become listed. Then once it's listed, that's performed its function as the primary market. It then is a secondary market as well, as it allows investors, individuals, government to buy and sell the shares, buy and sell the debt instruments as necessary. Okay. And those markets are highly regulated. Okay. When those markets are regulated, to become part of it, you need to ensure that you comply with what goes on within those markets. So what we have there is we need to think about the advisors that are available in your capital markets. Okay. The main one that you have is a sponsor. If you are becoming listed for the first time, or you are going through there and issuing debt for the first time, you need a sponsor. And they advise the board on how to go about issuing the debt or issuing the shares, and they coordinate the process. Okay, they pull everybody together because there's more than just the sponsor who acts as the advisor. Okay, think about the sponsor as being the overall, if you like, coordinator, overall power, bringing all the other advisors together. You then have what's referred to as a book runner. Okay, so a lot of this information is taken from the London Stock Exchange website. Things may be slightly different in your local jurisdiction's regulated market. But here in the UK, your book runner finds the investors and determines the price. Okay, so they will do all sorts of various calculations, and there'll be some discounted cash flow to help work out the price. And then based upon that price, they will go through there and then go on to find the investors. Okay, so they will directly approach the investor and say, look, there's this business, it's performed really well in the past. We expect it to be really profitable and with extreme growth in the future. Would you like to invest? Okay. You've then got your lawyers. You know, there's a lot of legal wranglings and loopholes that need to be overcome. So the lawyer will do some legal due diligence, check about the ownership of the shares, check that the number of shares that are issued are valid share certificates and that those shares do actually exist within the business. And then they will also go through there and draft the prospectus. So they will ensure that the brochure that tells you everything about the company is all done from a legal perspective and that there are no mistakes and everything is truthful about what's being explained about the share or the debt issue. Fourth one is looking at the reporting accountant. So the lawyer does the legal due diligence, the reporting accountant does the financial due diligence, so looks at the most recent financial statements, checks that they are correct, maybe looks at budgets, looks at forecasts and checks that they are correct. Checks about maybe any outstanding liabilities, that none of them have been hidden, that the value of the assets are correct, just to make sure that everything about the company's books, its accounts are valid. Okay. Also, there might be tax experts as well, so they might look at some tax advice as how to structure the issue to help with regards to tax from a company perspective and tax, if you like, from the investor's perspective to try and help the investors. But the main focus would be on the tax from a company's perspective. Then you also need a bit of financial PR, public relations. You know, it's a big thing that you're doing. You don't want it to go wrong. You want it to be reported well within the press. So the financial PR is all there about developing an appropriate communication strategy between yourselves, the investors, and the financial press. Okay, because if anything goes wrong, that could mean that the actual issue is unsuccessful. You don't meet the criteria and don't generate enough proceeds from the issue. And that might make it a bit expensive, as we see later, when that issue of shares or issue of debt needs to be underwritten. Okay, but we'll talk about that a little bit later. For now, all I want you to take on board is looking at what the financial markets are, looking at what, if you like, the capital markets are, which is the focus of what we have here, how those capital markets work with regards to individuals, with regards to companies, the governments, and how you can use those financial intermediaries. And then thinking about here with focus on the capital market and your primary and secondary markets, what the advisors are and what roles they do within the listing process or within that debt issue process. Okay, no numbers, so it's going to be a non-computational bit, so it's purely knowledge. If you have the knowledge, great. If not, it's going to be a bit of a disaster. So spend a bit of time looking through the notes, look at the odd study text here or there for maybe some additional bits of background, maybe a little bit more detail. But the key bit is to focus on practicing the questions. If you practice the questions, you learn more from those than you do by just reading through books and books and books. Okay, I'll see you all in the next session.